Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. Happy Friday, everyone. Hope you guys got some great upcoming plans for the weekend here. And it's August 16th. We got a couple items on the economic calendar. So we'll start off with the housing starts for the month of July. So in June, we had 1.241 million for housing starts. Forecast was calling for a higher number here at 1.257. However, it did drop a bit down to 1.191. So this came in a little bit of a surprise. But however, if you dig into the numbers, actually the housing, if you look into it, the housing, actual housing, single families for family went up. The loss is actually on the multi-families. That's where the biggest drop came in from. So based on that, we're year over year actually on a higher, like around up about 2% in terms of single families being created versus multi-families. So that's kind of what we're kind of looking for in our housing data here, and that's actually not a bad thing. You know, so that's actually pretty positive. So to move on, we got the building permits, and as you can see here, we had a nice little spike. So we had start off at 1.232 million in June, and forecast count for a slight uptick to 1.27, and actually went up to 1.336. So pretty nice future growth in housing. So we could see a nice potential robust here building up again. However, at the end here, we got the consumer sentiment not looking so good. So in July, it came in at 98.4. Forecast was supposed to be a slight downturn at 97.2, and it came in much further at down to 92.1. So this is kind of a survey that the University of Michigan kind of rolls out, kind of get a gauge as to people's sentiment of where everything's at, and it came in a little bit lower than expected here at 92.1. So let's kind of jump ahead here to the headline news. Stocks are up. They kind of rebounded a little bit yesterday. It was kind of a mixed. Nasdaq was the only one that kind of went downwards. Nasdaq or Dow was up about 99. So far this morning, actually, Dow is up about 300. So we're kind of continuing that trend. All three of indexes are actually up. So we're kind of taking our cue more from the economic calendar, but we're also kind of looking at the revisiting the whole week of what we've been kind of dealing with all week is the inverted yields, and then also China, especially the comments that they made yesterday, and which is kind of got people kind of perplexed as to they're a little confused by the comments because on Wednesday, we talked about pulling back on those, and then now they're kind of talking about the same thing like it was prior. So it's a little confusing. Investors are confused, and so they're kind of out right now. They're kind of shrugging it off and kind of moving forward because they kind of when the China came out with that later sentiment as to working for something more like a beneficial deal for both parties, and want to continue working. Like they're going to continue with their meeting in September. This is something that they are kind of shrugging off right now and kind of moving upwards. So let's see how this is playing out in the bond market. And bond market ended up nicely. We were just slightly above the Fibonacci level. We started the day this morning here just below that, and we're down a little bit. We're down about 25 basis points. As you can see, we were even further down. So most of the gains we had yesterday are gone. Depending on where you're at, the West Coast here, we're probably going to be slight improvement from, I would say, Wednesdays, a little bit of better pricing than Wednesday. But from yesterday's close, we're probably going to be off from yesterday's close. So depending on where this goes, we've been getting a lot of volatility this week, but that's kind of where we're at right now. We're down about 25 basis points, which translates to pricing a little worse than what we had yesterday. Here's the yields. Yields are up a little bit. We're up to about 1.572, just above it. It was at second floor of support, which we broke below yesterday, which looks like we're not really staying down too long. So we're up a little bit right now and kind of testing the first level of support here, which now would be the second layer of a ceiling, because once we break below that, it becomes a ceiling versus a floor of support. So we're kind of in between that right now, and right now we're at about 1.572. All right, so that pretty much wraps it up. If you guys are looking to buy or refinance, please reach out. I'd love to hear from you guys. The best way to reach me is just direct message me. I am a loan officer, and my company, CMG Financial, does service all 50 states. We carry all the loans out there from jumbo to conventional to FHA, VA, USDA. We carry niche loans that some lenders don't carry. Specifically, we got some investor loans, loans for real estate investors, uh, bank statement loans, which are fantastic for self-employed borrowers, and we got loans for foreign nationals. And then we got something that we carry, a SIMG Financial. They are all-in-one loan. This has been a real popular loan for me specifically, working with a lot of clients. Uh, People who want to have cash flow, want to pay off the mortgage much quicker, save themselves thousands of dollars in interest payments, and have more control over their mortgage. So this has been a fantastic tool for helping those people out. Some of the people I've been helping out are on schedule to pay off the loans within 5 to 7 years versus the 20 or 30-year mortgage. Home Funded is another program that's a fantastic deal for those who are want down payment assistance. It's great for not only first-time home buyers, could be great for those with a life-changing event from natural disaster like wildfires, earthquakes, hurricanes, stuff like that, to uh, people who got divorced, where one spouse moves out from the other and has to, now have to find a home for themselves, to even using this as a wedding registry where they can get their guests to go ahead and put funds into this as a part of their down payment for the next home. All right, folks, that's pretty much we'll call that a wrap. I hope you guys enjoy your weekend. We'll look forward to see you guys on Monday. Again, our rates are a little worse than our bond market's off, so mortgage rates are a little bit worse than what we saw at the close of yesterday, but a little bit better than what we saw on Wednesday. So still not a bad range, but something we'll have to keep our eyes on to see if we've already hit the top or if we're going to, most likely that'll be short term. We'll probably continue going up, but short term or not. All right, you guys have a great rest of your day. Thanks so much for watching. Catch you guys on Monday. Bye bye.